Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came into the day, futures are down, I think, about 10 to 12 handles. Lots of news once again, from Merkel losing some support to a lot of chatter out there that Greece leaving the Eurozone is going from 50% to 75%, and rightly so. There was also some headlines intraday saying there's going to be a run on some of the banks. Again, rightly so. Who's going to want to keep their funds in Greece banks when one day they could just freeze it and say, now you're converted to the drachma, or however you say it, and then you have no control. But what I think is the real problem is that people have known this, or the smart guys, for the last year or two, and their money's already out. And I think the smart money's out of a lot of other sovereign nations out in the Eurozone that puts the ECB that much on the hook. So with all that said, a lot of this is all over our head. What's not over our head is price points. What's not over our head is looking at the action, judging the market versus the headlines. What's not over our head is using some common sense, saying, you know what, 2 years ago we were down 17% from the highs. Last year, down 22% from the highs. Why would 4 to 5% be enough? Considering that really last weekend, or about 2 weeks ago, I feel like I really switched gears from being more flexible to very bearish when Greece finally said, okay, we love the deal you guys put together. Thanks for all taking your haircuts, but you know what? We're not going to pay you back. We don't care. Okay, which opened up another can of worms with also the change in leadership in France from austerity and deficit reduction to, I'd rather tax and spend, not stay the course. Our people are a little upset. We're cutting into their lunches. Or I'm not going to get political because people get mad at me, but the bottom line is every day we've had a pivot loaded trade against. Today, there wasn't that much activity. The pivot we talked about was 134.49. We went below it at first, came back above it, and then we closed a little bit off the highs, which is good. No, we closed near the lows, which is even better because typically to have a sustained rally, you have to have very, very oversold conditions to have more than just a quick little trade. And right now, the oscillator that I watch is only like negative 40, and those extreme oversold readings come around negative 80 or more. And with these little intraday moves to the upside, it burns off the oversold condition, so it keeps putting off the inevitable. Now, for that reason, I'm looking at the more macro charts to use it as as a roadmap. And if you look here at the chart, you will see, we've talked so many times in the beginning of this year about this trend line that you follow it as long as it stays intact. And if you recall, first time IBD put us in a correction was right here when we broke this upper area after putting together a few distribution days within this area. You had a quick move down to this area, which was a nice point of reference at the time. That was 1357. Then obviously you had a move back up. This is when the Dow was leading and the NASDAQ was lagging and the Russell was lagging. We were getting faulty signals. And then pow. These 2 days, IBD went back right from a rally, which they had here, to correction. And rightly so. A lot of people were saying, oh, they're not standing behind what they see. They're flip-floppers. When they put it back in a confirmed rally, they also said that major lows don't happen in May. They don't happen in June. Sometimes you get a small tradable one. They really happen in August and September. So I'd rather them be prudent, rather myself talk about it in a no-nonsense way where, okay, they just switched back, switch gears, we trade real time. We don't navigate friggin' Mack trucks here. We navigate sports car. Anyone watching this, I know there are a few guys that trade a few billion or whatnot, but still you're in a position where you could switch gears. If they can, so could you. So if you go back to the chart, this was a spot to switch gears. I know this is when I got stopped out. If you got stopped out here or on this day, you're not feeling the pain of the last 50 handles or so, which is still nice to not be involved in. And then if you go to this chart, okay, here you go a little bit closer up. This is the head and shoulders top formation, the left shoulder, the head, the right shoulder. I was on CNBC Asia the other day talking about 1360 is the neckline. Patty Dom from CNBC talked about the neckline here, and to watch is 1343. When we trade below it, we're going to maintain in motion to the downside. We've spoken about this 1420, which 1420 to the neckline of about 1360. You flip that over, that gets you a move down to about 1300. Along the way, you have this 1320 area, which could be the next stop. So we now just had this just say, if you want to do, here's your pole, here's your flag. You have a bear flag within this head and shoulders top pattern that's now in motion to the downside. We now have a new point of reference in today's low. Today's low was 1336. So we'll see how we handle that tomorrow. If we open up and trade below it, we'll continue. We could probably get a continuation short to the downside. If we open below it, we see how we handle it to the upside. Same drill. Tactical trading 101. So with that said, you could take a little bit more of a macro approach also, just to, I used some Fibonacci levels this morning just to show you that all in all, if you're a macro investor, you're still not feeling so off base, considering from this October low all the way up to this high here. So far, we've really only retraced 25% of this move, and that 38.2% retracement is really around 1290, which is above the 200-day and below this 1320, and right around the little overshoot level for this head and shoulders pattern. So we're kind of in no man's land. So when you're in no man's land right here, okay, which is below the neckline, in motion, it makes it a little bit difficult. So the reason why is because we've had such a move off the highs where it makes it hard to be compelled or have conviction on your shorts. And then if you're trying to play a bounce that's not ready for anything more than just a scalp, you can get hurt that way. So it's a good way to get chip chopped and lose a lot of money. So for me, I'm trying to be very, very selective. I'm taking tactical trades when they feel worth it. My 11 o'clock little video, I talked about how I really wasn't into this tape at all. Last Friday, I played a nice, quick oversold bounce. It went quickly. Today, I kind of was on the sidelines to the overall market. I was looking for a short in Apple. Apple wound up breaking that 562, broke below 560. Tomorrow will be interesting. If you look at Apple real quickly, you will see that it's coming into a real big area here. It closed on its low at 558.22. The old pivot here is 555. Depending on how we open tomorrow, we'll see what kind of trade we get. If we could trade another short through here or through this 555. You then have the 100-day down to 522. You have another support here down at 532. So this will be interesting to see how this plays out tomorrow. I'm short a little bit overnight. I took a lot of the trade off today because I don't think that much overnight risk. So I think the best trade would be have it open up $1 or so with some futures if that's the way it goes, and then be able to see relative weakness and short it through it, and then figure out how it handles at 555. But overall, trade worked out. It just took a little bit of time, it took a little patience, and there was definitely some moments if you added too much intraday, it was a little tricky. So anyway, stock looks like it should be a focus tomorrow. It's at key levels. We'll figure that out. As far as some other stocks, Amazon, one of the chosen ones, little tricky, right? If you take a look here, still I'm going to roll through, still holding this earnings gap besides this tail, closed near the lows, still here. I didn't trade it at all today. To me, it was just still working its way through this range here as it's still considered strong with the size of this earnings gap. LinkedIn acted very well today for itself. Okay, it's still in the game. Obviously Facebook's coming out Friday. It's still hanging around above. What's this moving average here? This is it's above the 50-day, which is showing a lot of strength because here's the 100 and the 200. So this is still considered a chosen one, and I still think that this is not the ugly stepbrother or sister to, I'm not saying that stepbrother or sister is always ugly, but to Facebook, I think this has its own leg to stand on, which has been proving the last few quarters. So if you're a short-term trader or a macro investor, I think you could stay long this as long as it stays above 101.02, or even this gap here at 96 still hangs in there. When we do decide to rally, I do think this is in the cards for higher prices. Priceline I talked about on earnings day. I said finally I think it's broken and cooked, and I think guys in my office have been having some success trading it to the short side. Just so you see, this was the level we talked about. It is now below it. This was your short. Remember from Red Dog, the chat conversation we had, it was 680. It's now down to 663. I do think it works its way to retest this gap at some point. So if you want to stay with that trade and you can handle it, be my guest. JP Morgan, still no real bounce. If you look here, we talked about this pivot to see if we could get any kind of weakness in the banks. The low here is 36.62, closed near the low. We'll see if it could continue to get down to this area, which is a gap back from late December. That will be an area that I give it a try here, or some type of Red Dog reversal. Tomorrow we will look at 35.76 as a pivot. That's the way I'll trade this. I actually made money long this early on, and then it just didn't work, so I got out of the way. So tomorrow we'll see how we open, if we open below it or above it. So we'll watch this pivot, and that's how I'll look at JP Morgan moving forward. The FAS, actually, let's go to the XLF, sorry. XLF, here we go. Look at that. Broke this level that we talked about. It broke below 1464 from the morning call. We'll see what happens here at this support. We'll see if it could hold it. It's now below the, I think that's the 100-day, right? Yep, it's below the 100-day, which strong groups have been holding, and now it's on its way to this area, and then the 200 days all the way down here. Stocks like Goldman Sachs, gross. You know, ever since this push through failure, thank goodness. That's why you have stops in place, because I know I was playing this for a breakout move. It failed. I haven't even traded it since. And look at it. I should have just shorted it there, but whatever. Below all the moving averages. It's a bit oversold, but at this point, I would avoid it. And I would avoid it like, you know, avoiding Morgan Stanley, which I spoke about this morning, saying watch it through the previous day's low. It broke it, closed near the lows. We'll see how it handles this 14. So at this point, a lot of dangerous looking stocks, especially in the financials. A lot of people don't know if there's going to be another type of hidden loss like we had in JP Morgan. So rightly, I would be nervous about holding them also. Some people are saying it should be contained. It's not the biggest deal. Okay, we'll let the market and the action tell us that instead of believing the analysts out there. Because obviously, if Jamie Dimon could know of a trade that he doesn't report on for 6 months or so, anyone else out there could be considering he was considered the white shoe, which we all thought, and now it's like, you know, DTA. You ever see that movie, Don't Trust Anyone? Don't trust anyone but the action. And at this point, we're continuing lower. We're not even drastically oversold. There are a few things working for people out there. You could still be long macro stocks if you have a long-term time objective, but only tier one at best. You could still be trading versus the pivots that we talk about in the morning, and you could still be in this corrective phase. If you could handle it, just keep cost averaging your short, because I do think, you know, I put last week, everyone loves when I say I think there's a 75% chance, and people are like, how do you get up with 75%? That just means my conviction is that way. I think last Thursday or Friday I said I now think there's a 75% chance we hit 1320, 1322. We also said 1340, which we got here, and I don't think that's going to stick. So I do think 1320, 1322 will be there. And I would say now I go 50% that we hit 1295 to 1305. A lot of guys ask me, will you be buying 1320 or 1322? Well, if we get there quickly, yes. If we have this intraday crappy scalpy action and we keep burning up the oversold reading, probably not. But if we can get down there in the next day or so, maybe we get more of a trade for a few hours, and maybe it lasts a few days. But overall, I don't think these headlines are going away. Tomorrow you have Merkel and Hollandale. I don't even know how to really pronounce it, so I don't make fun of myself. But you know, I think it's Hollandan or something of that fashion. We'll see how that goes, what kind of headlines come out of there. Then we have the Fed meeting or the minutes on Wednesday. I think the CPI is also tomorrow. So there's going to be some whipsaw headlines, but overall, all rallies have been sold. And if you're selective, you could press, you know, into support for further breakdowns, but that momentum has not been great, or that momentum hasn't been fierce to the downside. It's more been like a buy in the hole, all right? Take your profit on the move up, short some, short more, and then, you know, and then meander all the way down. And I know it's not fast type trading or a fast tape, but we can't control the tape. We can't control the world. All we can control is how we approach it with our keyboard, with our tactics. Do not get happy fingers. Do not overtrade. Take the compelling setup. We help find them for you each day, and we'll continue to do that for tomorrow. This is Scott Redler, T3 Live. The recap, see you at the morning call. Have a good night.